Hi everyone, welcome to this one. I hope that you're doing well. And this one, we're going to talk about entry model. You have to bear in mind that entry model just comes to play when you are done with your context, which is, first of all, number one, step one is you have to define your pattern. Systematically, you have to define your pattern, which is a trendy pattern. And the second step is that you have to define that this trendy pattern that you have defined has strong momentum. It is strong enough. It is trendy enough. Okay, I'm just saying it in different words that it settles down in your mind. And afterwards, you're just looking for entry model in your overbought or oversold area zones. Okay. Now, let's imagine that we have an uptrend. Okay, so this is our first leg. This is the pullback. Pullback could be two-legged pullback like this one, three-legged pullback, complex pullback, whatever it is. So now this pullback is going on, and we have another pullback here, right? So we have leg one. Here it comes leg two. So you would say that you would argue that, oh, we have a lot of legs here. As far as it is not broken, so we call this one pullback. You could have thousands of legs here. It doesn't matter. So we're talking about a structural break. So if you're just counting the legs based on the GAN, okay, you have to go back if you don't know it. Okay, so sometimes you're just using GAN legs. Sometimes you're using valid pullback legs, which you just add more filters on the GAN legs, okay, based on the context of the market. Okay, now here we have the pullback. So in the pullback phase of uptrend, we are going to compare the highs of the candles. Okay, so why that? Why do we that? I'm going to explain. So the high of this candle is lower than the previous one, right? And this one again, the high of this candle is lower than the high of the previous candle in our uptrend pullback phase. Okay, we're just going to compare this one. Now, look, this is the area of the previous pullback zone. Okay, I'm going to add this to this explanation later. Let me define this later. You will understand what I mean by that. So these are coming down. Now, our first green candle has started from here and went up, and also the high of the previous candle has been taken, okay, by this one. So this is the first time after the pullback that the trend wants to continue. Okay, this is the first time it happens. So it means that this leg is coming down, and here, this is the first time you can see that it wants to just try to break this high here, okay? So if it wants to break this high, first it needs to break the high of these candles, right? Now, this is called first time. You can say it is first entry. These entries are not mine. I didn't create it. It is from Albrecht's, okay? So now, because I didn't see anything useful about this on internet, so I tried to make this step by step for you, so that you can understand it. It is a very high probable entry, and you will be surprised if you go. We will go on the chart, and you'll see that how frequently it happens, and for all these moments that you were just trying to find a way to be profitable, it was in front of your eyes. So, but you were not just careful or let's say detailed enough to just figure this out. And now here, this is called our first entry. So when you're just comparing the highs in the uptrend, highs of the pullback in the uptrend. So when it is taken, now this is our first entry. But you have to just bear in mind, if we have this leg, what percentage of retracement it is taking the leg. So it is about the 50%, right? Now, okay, let's see. This is our first entry. Okay, this happens later. Okay, if you were entering here, so, and if you were aiming this high, now let's say what happens to your stop is, let's say you're entering here, your stop is here, and you're aiming to get 1 to 2 out of this pullback, okay, and you're betting on that price will continue. Let's see what happens to your, okay, stop. Your stop is here. Now you're out. Okay. Before it reaches to your target, it takes you out. Now, the same scenario happens here. Look, we have this. The same scenario happens here. Now, but the difference between the first one and the second one is that this is in the lower zone. Okay. So ICT guys would say premium and discount. So it could be, I mean, the lower retracement. Okay. And the reason that this is retracing back, because it is retracing to something in here. It is reacting to something in here. So, and here, okay, we are creating internal liquidity. Okay. So, and internal liquidity, and also here we have supply and demand zones. Okay, we have supply zones here. After we are taking the internal liquidity here, who are the people that they're standing here? If we were buying it, so under this one, okay, so we buy it, and if it comes down, okay, sellers are up and buyers are here, right? Now, it means that buyers are defeated, okay? Sellers are in control for temporary short time, okay? So now that sellers are in control, what does it mean? It means that numbers of the sellers or amount of the lots the sellers have is more than amount of the buyers, okay, here. Now, here they're looking for what? Sellers are looking for buyers, okay? These buyers, okay, were not enough for them. They're looking for some, they're getting some buyers here by trapping and taking some stops. And now we have other line of defense here. And if it is taken, it goes down. Okay. Now the same scenario happens here, but this one is high probable than this one. What is the reason? The first thing is that we have some buyers here, right? It is taken. So now the sellers are coming down. If they cannot take this one because they have enough liquidity here, and if they cannot take this one, I mean, it doesn't take this swing, okay? It is not strong enough to go down. It is an indication that they're not, the sellers are not that much strong to take this one. They're strong to take this, right? But they're not as strong as these buyers are, okay, or here before it comes down. The second time that it happens, we call the second entry, okay? Now, the second entries are more probable than the first entries, but we cannot say that first entries are not probable as well. Depends where it happens. Okay, this is called second entry. Now, this time, you're just again comparing the high, and when it is taken, you can enter here, and usually when the second entry happens, it usually takes this high. It depends where in this leg you are in again. So now here our leg is 4. Now, you have to just bear in mind that where you're taking your setup. Here it is barely just retesting this zone. Here it is deep inside this zone, and even it retested the 50% of this pullback. So now this bearish scenario, if we have this trend, so 1, extension 1, pullback 1, extension 2, now we're in pullback 2. So when we're going in the downtrend, we're just comparing the lows of this. Okay, so now compare the lows. Okay, up until here, we don't have any lows, okay, lower than the previous one. But here, look, this happens. This low is lower than the previous one and even that one. Okay, it is taking this one. Okay, so it has taken this one. This is the first time it is attempting to take this swing low. And this is our first entry. So if you just enter here, your stop is here, and you're just aiming for 1-to-1, it is also possible that you can take that. I mean, even if it is a breakout entry, you can just reach to that one. But sometimes you don't take it if you have more expectation and you want to just have higher RR. So you're expecting that this low is taken. So now here, now again, it is returning back, taking internal liquidity here. So it shows that buyers are in control. We have buyers here. Sellers are defeated here temporarily. We have also these sellers here and also these sellers here. Okay, these sellers. So some of these sellers are here, but most of them are there and they're driving the market down. Okay, now here, just again, as we compare the lows, we're comparing the lows here as well. Now, here, our low, first time that this low is taken. Look, now, usually green one is better to be taken and by the red ones. Okay, especially the close of the candle. Okay, not the shadow. It depends on your preference. Some people just try to take any trade by breakouts. Some people wait for close of the candle for more confirmation, like as we had the filter for valid high and valid low. This one, if we have this close of the candle, it is creating a valid low as far as this is the high. I mean, the last closing candle is up. Anyways, this is the second entry. Now you can see it here. Now this is second entry, and usually it not only takes this one, it also takes this one. Okay, so now as you see, also it reached to the 50% of the pullback, and later it took this one as well. Now, context is the reason for working setup. So look, when you have a seed, okay, you want to just plant a seed and you want to have flower or a tree. So here you put the seed underground, I mean under the soil, okay, the soil, and we need other stuff to just make this seed happen, okay, and I mean grow and become a tree or flower. So we need water, okay, we need to water it. We need sun, okay. So if we don't have water, sun, and good soil, having seed has nothing to do with planting and having tree or anything. It doesn't make sense. So later on, we have this flower, okay? The same is in trading, okay? Because you don't like watching psychological videos, okay? That's why I try to nest the psychological concepts in a short format here. There is no surprise that people are not getting profitable because they think that their mental, their psychology is bulletproof. But in reality, the most important part is psychology. I don't want to just say that psychology, you need to be psychologist and later trader. No, actually, it is, again, a stupid and wrong idea. Wrong way of looking at it. You have to be a trader who knows their psychology, and you have to have awareness about your mental issues. We don't say that you need to just resolve your mental issues completely. It is impossible, and you will never achieve this actually unrealistic goal. So you have to have a system that is designed in spite of your mental issues, it works for you. So environment means soil, sun, and water leads to seed will grow into flower. The same context, as I explained, trendy pattern, strong trendy pattern, and also if it comes retest the zone, okay, based on this strong pattern. So what do you expect? Setup will play out frequently, right? Your TP will hit frequently, or you will have a higher RR. Okay, now it means that no strong trend and no weak zone retest. We don't have any setup, no trade. No strong trend. We want to have strong trend if it is going up. And our retest should be weak. If it is not weak, it means that it is a reversal. So that's the reason that you cannot easily say that, okay, mechanically, I'm just 1, 2, 3, I'm doing this and done. No. I could say that most critical thing in trading that is really close to what happens behind the scene is liquidity, and liquidity means momentum, the strength of the movement that you have. So now 75% of your chance of winning depends on the environment you have it. Your setup should be in a correct environment, unless you're not going to have winning setups. Just 25% of finding good setup works. Okay. So now, first of all, you have to just know that, okay, you have this setup, but also it could have fractals of this setup. Okay. So what does it mean? It means that it is increasing the probability of setup, okay, working out for you. Look, this is our trend, right? Now, this trend has its own swing high, swing lows, and if you look at it, we have these blue ones are swing highs, these red ones are swing lows, right? Now, here we have 1, 2, 3, 4. As far as we don't have the second extension, we don't have trend in the place, right? So we need to have one extension, first pullback, second extension, second pullback. So here, after this fractal is formed, you have just started the trend, okay? Now, later on, you can just think about the scenario. First, you have to just define that how strong this trend is. And here we still have this trend, okay, intact. So this high is taken, but look how it is taken. Look how it is taken, how it is taken. This shows the strength of the move. So here we have this one coming down. It goes up. It tries to go up again. So, I mean that in swing point of view, it happens like this. We need a candle, okay? So red candle, these red candles that we are just following the highs of it. The green candle just is taken one of the last one. So it means that this is the end of pullback here. Now again, the same scenario here. End of pullback happens here. This is the first time that this is the end of pullback. This is the second time this is the end of pullback, let's say. Okay. Again, this is the first time this is the end of pullback. This is the second time this is the end of pullback. So look here, it could, in the market, anything can happen. So as you see here. So inside this, if you just dive into these candles, okay, inside these candles, let me say, okay, you will see something like this. Okay, now here we have a trend is forming here. So this is the fractal of it. So here, this is the change of phase of our lower time frame, which actually it happens at the same time your candle is forming. Sometimes it is sooner than your candle is formed and takes the previous candle's high. Sometimes it is a little bit later, okay? So, but these two will work hand in hand and helps you to just understand where to enter, pinpoint your entry. So now let's imagine that some people are defining their oversold area based on this, let's say, pullback depth, okay? So here we have also this one. Here we have also this one. And some people would use trend lines, okay, these channels to define. They're just drawing the mid and just say divide these two into two parts. Okay, some people use both of them, okay? All of them are good as far as they are systematic and you're just consistent with this one. So here we have this channel format. So again, the same scenario. So we have this one. Okay, it has its own high and lows. Okay, swing high and lows. It has this candle. This is the first time it is trying to break down. Okay, and this one is again first time. Here we have the second time. That's why we call it second entry. So, and this one is first entry. This one is our second entry. So it tries to just take this pullback, and not only this pullback and this swing low. And if we dive into the inside this candles inside of it, so in the lower time frame, you can see what something like this. Okay, I don't want to just explain a lot. So here we can see that this is the end of pullback. Okay, now you can just dive into it and 1, 2, 3. Okay, so then we can enter here based on stops of this time frame and targets of the higher time frame, which is this red one, and this pink one is our stop range. So some people, and by the way, you may have this kind of setups here as well, as you see. But which one is high probable, this one or this one? Definitely the high one. Why? Because these higher time frames of sellers also helping you to just reach to your target there. Okay. So we have a lot of people driving the market down in the higher place than lower places. Okay. It is here is too cheap for them to again drive the market down. They say that okay, it's already overextended. Now, look, the system with the precision and expectation will work for you. So let's say that this is your system, this is your strategy. It doesn't matter who is riding this bicycle, as far as you know that how to ride the bicycle. What do I mean by that? Maybe you think that, oh, my psychology has problem. And no, I mean that as far as you have a clear and step-by-step systematic trading strategy, you're exactly sure where you're supposed to go enter, where you're supposed to exit. Okay, if you know that for sure, and you know the reason behind these stuff, it is not just like trusting my words, or you have to just see it frequently on the chart. And you have to have a logic behind that. You have to make a story about the reason that this strategy works. Okay, if you don't have a reason for what you're doing in the market, decision you're making, okay, you cannot actually endure the pressure of the trade while it is and then from entering time to the exit time. It doesn't matter if it is a stop loss or if it is TP hit. Okay, so you have to know that the system is working. It doesn't matter if it is you or someone else. Let's imagine that we have a car or taxi or Lamborghini, whatever. The Lamborghini doesn't understand if you're driving it or someone who is poor is sitting in this one. As far as it is working and it is going from point A to point B, it doesn't care who the driver is. As far as driver knows how to drive the car, okay, the system should work. So despite the fact if it is the driver is a kid or a professional driver, the same here. If it is your system, so no matter if it is a kid riding this bicycle or if it is you riding this bicycle, so it should go from point A to point B, okay, no matter who is the rider of this bicycle and system is. So you have to trust your system. It means that your system needs to give you this trust. Okay, so how is it just this trust and this belief is formed? You have to go and see it for yourself on the chart over and over. Okay, so how do you just deal with these things in the market? Look, here we have a teacher, here we have a doctor. So a teacher knows exactly who he is dealing with, what his job and task is. He's dealing with the kids. He's dealing with the students, right? The students are someone he or she expects to work with them. A doctor is working with patients, right? She knows exactly what her or his job is. Okay. What about traders? Traders don't have any people to work with, or they're not in interact with anyone else. They are dealing with what? They're dealing with the feelings, their own feelings. Okay, look, let's imagine that we have pullback. Okay, this is a trend. You want to just jump into the trade and take this trade. So your expectation is that you have your entry point here, your stop loss behind the swing, and you want to just take 1 to 2 or 1 to whatever. Okay. So you're expecting this movement, right? This is something very, by the book. That step by step, if you just follow it, you expect this one. But what happens in the real market? So you're waiting for this, candles to just come here and retest this one and go back. What happens? Before it comes here, before it reaches to this point of entry, it goes without you entering the position. So what kind of feeling does it create? So as a trader, your job is just dealing with the feelings. There is no people, there is no device, there's nothing. Your job is just dealing with your emotion. And you have to just predefine before you enter this, realm of trading. You need to just know what your reactions will be for different scenarios, because your trigger will be, your emotions will be triggered. Okay. And you have to expect that, triggering your emotion. Okay. You have to expect it and you have to be prepared for that. If not, you're screwed. I'm sorry. So then, the FOMO kicks in, fear of missing out kicks in. You think that, I'm losing the trade. Let me get inside. As soon as you enter, because of the nature of the market, it comes back, and you say that, you have some conspiracy theory. Somebody is just looking for hunting my stops. No, it is just doing its own job. Market doesn't care about your peanuts. Okay, as far as you're not an institution or banks that you have enough liquidity or money to just drive the market up or down. Yes, it needs to just hunt some stops to just create the initial movement inertia. Okay, yes, it is, but it doesn't come back intentionally just because you entered the market. So this is FOMO, fear of missing out. So it triggers impatience. You have to be very ridiculously patient in trading. Okay. So now another scenario, you wait here, you get inside a trade and it hits your stop loss. What kind of feeling you're dealing with? So you're dealing with here two kinds of fears: fear of loss, fear of being wrong. Depends on your personality. Okay. If you are wrong, okay, and if you're a person who is high achiever, especially you're an engineer, you're a doctor, you're a lawyer, you're someone who's successful in his or her job, this fear will kick in. Okay. And it will create a feeling of discomfort because you are evaluating your worth and your value based on your results. P&L results, dollar amount that you are earning. That's one of the dangerous things that you can do. So here, anger and maybe bad luck. Okay, you think that you get angry, you say that I'm unlucky. So look, it just went and just hit my stop and continue going up. And you get angry and you're double the size or start to revenge trade. Then here now we have this is fear of missing out, fear of losing and being wrong. We have four of them. These, by the way, these are not something I created. These are something that I'm quoting from Mark Douglas. So here now, okay, you get in, like the scenario that you were imagining. Everything is nice. So later, look at what happened. Uh-oh. You say that, I shouldn't have exited here, right? So you expect yourself to be a fortune teller. You wanted to see that, the market will go up. Okay. So no, it is impossible. So fear of leaving money on the table. So here you have a feeling of regret. Okay. So look, this is full of emotion here, right? All our emotion. Okay. You have to deal with this emotion. Okay. Now that I talked about this one, by the way, nature of trading is that I want to just say that those who can trade, okay, this is something that Albrook says as well, they don't talk much, okay? So they do day trading, they don't sell courses. They don't sell mentorship or such. Okay. They do their trading. They don't need you to get money. And those that they can, they just talk and talk because they want to market their YouTube channel. They want to market their mentorship. They want to sell courses. Okay. Just, I didn't want to just mention this. Okay. Few years back, if I were in your place right now and somebody was teaching me this stuff in systematic way, step by step, okay, I would say I was the luckiest. I could be the luckiest person on the earth, right? So now you're very, very lucky to have this kind of content, even in the mentorship and the paid ones. You can barely find this kind of drills and stuff. Okay, please don't lose your chance. Okay, I don't know, some few of you are in subscribe to my channel, some viewers. Okay, so I believe that the life is not a random walk, and I think you deserved and you deserve to have this content because you were watching it. So please don't screw your time. Believe in the system. Try to create yourself a system that takes care of you rather than you trying to invent something. I mean, psychological barriers that you are creating here. I don't know. Many other stuff. Okay. So try to just go deep into the masterclass and watch it over and over and understand what it is. Okay. How can you use it in the real market? It is designed in a way that there is no fluff and it is just to the point. Okay. I think this is the fluff that I'm having it just in just 2 minutes or something that I was just talking to you. So now let's go to the real market. Okay. So the first entry here, look, it happened there. If we have this leg, now if we trace back the highs of the candles, this is the first entry, right? Now, again, it goes up, went down. Here, after this one is taken, this is our first entry, okay? Now, again, it goes up, comes, and here is our first entry. If you put your stop here, your stop will be taken. Okay, would be taken. So here is your first entry. So actually 1, 2. This is your after one. This one is your second entry. This is the first entry. This is the second entry. Again, highs of the candle. This is your second entry. I mean, this one is first entry because it is taken. So here, this is your first entry. Here, this is your first entry. As far as it is, we don't know if this one is gone first or this one. Okay, in the real market, you will see that. Then here we have your first entry here, and this one is your second entry. Okay, it didn't go down, but it happens here. So now this is your first entry. So the barely has the 25% retracement. This is your second entry. Now, let me go to the real chart and yeah, here also I just showed this one. Let me go here to the real chart. Like these are actually these ones I didn't touch this. These are something that I myself took the trades based off. So look, guys, here we have this trend coming down, right? I'm just going to show you the first and the second entries that it happened on the trade, on the real chart. Look, if you're coming down here, first of all, he said that this kind of entry works when you have trendy market. Okay, so it comes down. Okay, so it is coming down, right? This, when we're coming down, we're just in the pullback, we're just comparing the lows, right? So this low is lower than the the second low is higher than this one. It is taken in this zone. Let me just say, okay, here. If you put your stop here, can stop is behind this one. Okay. So you can go for 1 to fun here, like that. Okay. Another one here. Let's go with this. Look, here the low, we're just comparing the lows. This low is lower than the second one. And this one is lower than the third one. Here, the low is taken by this one. So you go here, your stop is almost there. You can go to 1 to 1 there. Okay. So why is it working then? Why is it working here, but it doesn't work for you sometimes? The reason is, one, we have pattern. Trendy pattern. Okay. Two, it has momentum. So I'm just talking about entries here. You're not going to enter based on this time frame. You're going to break this time frame down into lower time frame. You know how to do it based on the GAN system. Here, when you have this established trend, like look here, as you see, I haven't taken this trade, okay, based on this chart. I have taken this trade based on the lower time frame, not this one. When we have this one here, let me see if I can find that area that I have entered. This is the zone. Yes, this is the zone we're talking about. Hopefully I can find it there. Yeah, I think it is happening. Yes, right there. Look, guys. So when it was here, okay, I have late entry here. I should have entered just right there. Okay, I was comparing the lows like this. Okay, here. Now it is not taking yet. It is not taking yet. Now it is taken here by there. Okay, because it was so fast, I entered a little bit later. I think maybe I entered here. I don't remember. But as far as the location is right, I entered, I think, in here, right? The second entry. So now, again, we don't have access to that. Maybe we have it. Okay, yes. Okay. This is the part that I have entered the market. Okay. So based off this one, okay, if I have entered here, okay, this is the part that the phase of the market is changing, yeah, from upswing to the, from up to down, because it has retraced here to our pullback, okay, and also not only that one, it has retested this left shoulder, whatever you want to call it, Quasimodo, you can say, okay. So as far as it is retested, and there was some liquidity here, it was taken, so internal liquidity. It tapped inside that, and I entered there. Okay, now, so again, the same story here. If we want to analyze, we're going to analyze from the higher time frame. Okay, so we want to find entries like this one. Okay. Oh yeah, I can remember this one that it was almost in the end of this leg when we have this channel. Okay, so I'm sorry, that this swing, so it went down. Let me show it to you here. It happened just right here. Look, now I had this movement, if you can see it there. 1, 2, 3, 4, and now I wanted to enter, but I later realized that in this area, if you look at this area here, okay, we have some resistance. So I was late for the party already, okay, because I didn't enter based on this zone, okay. I should have entered from this zone and retesting one of these areas, like, I don't know, I could just, this is not left shoulder, it came there. Okay, we could call this one is FTR. So FTR of like, okay. So I should have waited for this one, and if it doesn't come, I wouldn't enter. Okay. So, but I entered based on the first entry concept here. Okay. And I think that I saw some resistance. I just exited in 1 to 1.5. I don't remember exactly. So now look, this first entry happens all over the market. Okay. If I want to count that, okay, look here after this leg is coming down here, even when it is pullback zone. Okay. I mean, if it is lower probability, okay, if we want to take a trade, long trade, so we are comparing the highs of the pullback, right? This high is lower than this one, and this one is lower than that one. Okay, if you were taking the trade here, your stop would be hit here immediately. First of all, because the context is not right. And also, it doesn't matter if your stop is hit because it gives you a lot of high rewards trades that you cannot even imagine. Okay, but you have to just bear in mind that what percentage of this leg it just retraced. So you cannot just take trades on top of this leg and expecting to break it again because it doesn't have that much of liquidity anymore. So here again we have this first entry. Okay, if we compare the lows here, first, second, here it was taken. And look, immediately your stop would be hit. But what about this one? This is low probability again, but this is better. The result is much better. So please go ahead and as far as it is aligned, you can take the trade. There is no use to take any long trade here as far as you have a, down trend pattern. Okay, so you just look for any kind of entry as far as your pullback is retracing back to some zones here, not only in the higher time frame, not only here, okay, but also in the lower time frame. Okay, so you can wait for this one. Here we have the liquidity sweep. Okay, yeah. Afterwards, you have the first entry there, right? So why did it work? Because it is in the right context, in the right zone. So again, here, so it came down. Now 1, 2, 3. We're waiting here, right? Now again, counting. Low, low, low. This low is taken. So your stop is there. Your target is here. 1, 2, blah, blah. I don't know. So again, here it is your first entry, right? Here, your stop would be hit because it doesn't give you enough RR. Look, if you put your stop there and you're targeting this swing, so you have less than 1-to-1 reward to risk. So it isn't worth taking this trade, right? So you have to consider what your RR at least is. So here again, this one, it goes up there. So again, you're taking the trade. So let's see if it gives you enough RR up until here. Yeah, it is more than 1. It is worth taking. Like that. So, and also not only RR, you have to just compare that where it is located. So does it have any sweep here? Yes, it has a little sweep. So if it was going up, if it was higher than this one, it would be much better. But it happened in there, right? So end up pullback is there. Now again here, we have the counting of the leg here. Came down like this. Okay. Here it is going down. It is creating internal liquidity and it is retracing back to this zone. Okay. And inside this zone, we can go down into a lower time frame. Okay. You can find some places that is this retracing, right? That is retracing. So you could consider this left shoulder. Okay. Or these left shoulders. Let's say this one is overlapping. This one or this one. So here, because we have sellers up there, right? Now they're driving the market down. So after retracing this one and closing back inside this part, you can enter the close of the market like there. And just here, not too long range, but this one. So it cannot be easier than this one. Yeah. So, or you can just not go to the lower time frame and take your trade based on this. I mean, first entry. Yeah, you enter here, your stop will go there and see if it gives you one-to-one, barely. So if you want to just go based on the first entry, you wouldn't enter here because this is so long. Or if you were just going based on the break like this, okay, your entry is based on this one trigger and your stop is there and you're targeting this one. As far as you have this trend down, and also it has strong momentum. So before it is retracing back, it's going to deliver your TP. That's all about it. So I hope that you liked it. So this is the very critical thing about entry model. Okay, you need to know where to enter when it is in the zone and it is retracing back to the FTRs or SND zones and sweeping the liquidity. So have a good one. Bye for now.